Welcome to our financial analysis, where we dive into the Iraqi dinar versus the Zimbabwe dollar, exploring which currency holds more promise for investors today. Let's uncover the facts and trends shaping the potential of these two diverse currencies. Iraqi dinar. The Iraqi dinar has recently seen significant economic developments, bolstering its potential appeal to investors. A pivotal move came when the Central Bank of Iraq secured an approval from the U.S. Federal Reserve for its 2024 dollar supply, a step signaling both increased economic stability and a boost in international confidence. This approval is crucial as it ensures that Iraq has access to the dollar resources needed to support trade and investment activities, essential for a country striving to stabilize and grow its economy after years of turmoil. These developments are part of broader efforts by the Iraqi government and its central bank to enhance the dinar's value and stabilize the market. Discussions have included measures such as monitoring financial transactions more closely and improving the banking sector's infrastructure to support a transition towards a more robust economic environment. This strategic focus on economic stability and revaluation potential makes the Iraqi dinar a currency worth watching for investors looking for opportunities in emerging markets. Zimbabwe dollar. The Zimbabwe dollar faces ongoing economic challenges that critically undermine its appeal as an investment. After reintroducing the Zimbabwe dollar in 2019, the country hoped to stabilize its economy, previously ravaged by hyperinflation. However, the efforts have not curbed the economic instability. Zimbabwe continues to experience high inflation rates, severely impacting the currency's value and trust. The persistent economic difficulties have led to a recurring preference among the populace and businesses for more stable foreign currencies over the local Zimbabwe dollar. This preference highlights the significant hurdles the Zimbabwe dollar faces in regaining a foothold as a reliable currency in both local and international markets. Iraqi dinar. The Iraqi dinar presents a unique opportunity for investors, particularly those who are risk-tolerant and looking for potential in emerging markets. Recent economic reforms and strategic plans by the Iraqi government and its central bank aim to bolster the economy and enhance the dinar's value. Efforts to stabilize the market and increase the dinar's value have been met with cautious optimism by the international community, particularly following the approval from the U.S. Federal Reserve to facilitate dollar transactions for 2024. This development suggests a potential upward trajectory for the dinar, making it an intriguing option for investors. However, potential investors should remain aware of the risks involved, including political instability and the volatile nature of the region's economy, which can affect the currency's future. Investor sentiment. Iraqi dinar. The Iraqi dinar attracts considerable attention from speculative investors, buoyed by the possibility of future revaluation, or RV, an event that could potentially increase its value significantly. Online communities and forums buzz with discussions and speculations about the Iraqi dinar, where enthusiasts and investors share news, rumors, and strategies related to dinar investments. This speculative interest stems from historical precedents where countries have revalued their currencies under similar circumstances, leading to substantial gains for currency holders. Despite the excitement, potential investors should approach with caution. The allure of high returns is often shadowed by significant risks, including the instability in the region and the speculative nature of such investments. The Iraqi dinar's value has been influenced by domestic reforms, international relations, and global oil prices, factors that contribute to its complex investment profile. Investors are encouraged to thoroughly research and consider the geopolitical and economic realities surrounding the dinar before committing to investments. Zimbabwe dollar. Hyperinflation impact. The impact of hyperinflation on the Zimbabwe dollar has been severe and persistent, marking it as a highly risky choice for investors. Hyperinflation occurs when the prices of goods and services rise uncontrollably over a very short period, which has been a recurring issue in Zimbabwe's recent history. This economic condition erodes the value of the currency rapidly, making the Zimbabwe dollar unstable for savings and investments. Frequent bouts of hyperinflation have not only diminished the purchasing power of the currency, but also led to a loss of confidence among both local and international investors. This scenario poses a significant risk for any investment tied to the Zimbabwe dollar. The currency's instability discourages long-term economic planning and investments, as the value of returns can be unpredictable and generally unfavorable. Given these conditions, the Zimbabwe dollar's appeal to investors is considerably lower compared to more stable and predictable currencies in the global market. Market accessibility: Iraqi dinar. Despite recent restrictions, the Iraqi dinar remains relatively accessible to global investors compared to the Zimbabwe dollar. Recent U.S. actions, including the ban on several Iraqi banks from using the central bank's daily dollar auction due to concerns over money laundering and fraud, have indeed added complexity to the currency's exchange environment. However, the Central Bank of Iraq's efforts to stabilize the currency and improve regulatory measures show a commitment to maintaining and enhancing accessibility for foreign investors. The dinar's inclusion in international financial systems, along with the potential for economic growth backed by Iraq's vast oil reserves, contributes to its appeal as an investment option, albeit with inherent risks tied to regional stability and global economic conditions. Speculative risks: Iraqi dinar. Investing in the Iraqi dinar is fraught with speculative risks that potential investors must consider. The currency's market is influenced by not just economic fundamentals, but also by speculative trading and rumors of potential revaluation. Such speculations often attract investors looking for quick profits based on rumored increases in value, which may not materialize. Additionally, the Iraqi dinar market has been targeted by scams that promise high returns from currency revaluations that are unlikely to happen. These schemes often exploit the lack of investor knowledge about the complex geopolitical and economic factors that influence the dinar's value. It's crucial for investors to approach dinar investments with skepticism towards unverified claims and to conduct thorough due diligence to avoid falling prey to fraudulent activities. Economic policies: Iraqi dinar. The Iraqi government and the Central Bank of Iraq, CBI, have been implementing a series of economic reforms aimed at enhancing the stability and value of the Iraqi dinar. These policies include efforts to improve the banking sector, enhance monetary policy, and foster better relationships with international financial institutions. Recent strategic actions, such as securing the U.S. Federal Reserve's approval for the 2024 dollar supply, demonstrate a significant step towards boosting investor confidence and stabilizing the currency. In conclusion, while both the Iraqi dinar and the Zimbabwe dollar present unique opportunities and challenges, the dinar's recent economic reforms and international backing suggest a more favorable outlook for risk-tolerant investors. Thank you for joining us in this currency comparison, and don't forget to share your thoughts and subscribe for more insightful analysis.